What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Wednesday, March 20th. Alright guys, Tesla stock here today is down $2.48 a share. That's minus 1.43%. It's essentially flat, down about 15 cents in the after hours. As always, take after hours with a grain of salt. Volume is very low, easy to push stocks around. But let's get started here on Tesla with our daily ritual, the volume profile analysis on the 5-minute chart. The goal here is always to try to pull out some hidden bias that we can't necessarily see simply by looking at the price action. Listen, if you have not done so already, please subscribe to the channel. I greatly appreciate it. Let's take a look. Now, the moves on Tesla here today that I'm primarily interested in, I'm going to group this together as one move, this fade off the open and then slower recovery, basically to what many people would call net neutral. We basically reclaimed the entirety of that morning dump off. Now, the truth is, with moves like this, you have to first of all consider the context of the volume based on time of day. But just because two moves put a stock essentially at the same spot when it's all said and done does not mean they were necessarily created equal. And truthfully, guys, on Tesla here today, this is the only move, or two moves collectively, I suppose, that I'm really interested in. We basically got a consolidation throughout the rest of the day. So let's take a look here. Now, here in this morning dump off, we did see this contextual high volume first candle. That's very normal. We expect that. We then got two elevated red candles on those two elevated volume bars on those two bigger red candles. The truth is, though, you guys know by now, I like to see at least like a minimum of 3, if not 4, consecutive out of context volume bars to really start taking something like that seriously. And that, to me, I mean, clearly there was some bearish bias in that 10-minute period, not only in the stock price itself, but also in the volume profile. But honestly, considering the lack of consecutive candles, it's just barely there. On the flip side here, we looked at this recovery move. We had some elevated buying volume, a little bit longer, because typically you expect kind of a U shape, right? So it would chop off those volume bars as it comes into lunch. And we had some elevated volume a little bit deeper into the day. But again, it's not so ridiculously out of context when you consider these, 2, 3, 4 volume bars that we got after that initial open bar. So the truth here is, bulls, that initial dump off that we got on Tesla this morning was not overwhelmingly biased to the bearish side in terms of the volume profile. And bears, for you guys, that recovery that we got, again, there was a little bit of bias, but it wasn't overwhelming by any means. So the volume profile here today on Tesla, even though we had some volatility, off the open, essentially a wash here, which is very interesting. Now, let's move on to the self-fulfilling prophecy psychological levels, starting with the 30-minute chart. These are the levels that I'm watching incredibly carefully come tomorrow, Wednesday. Now, do you guys remember in yesterday's Tesla video, if you caught it, we talked about how we reclaimed both moving averages, again, big psychological levels on a popular chart like the 30-minute. We were able to claim both of them in a single day. Now, today was kind of like, okay, can we hold them now? We interestingly got the 50 period crossing over the 200 period, which we discussed as a possibility last night. Though, unfortunately, not able to hold the 50 period. We did hold the 200 period after giving it up early. We held that into the close with a lot of bounces. Okay, that's decent to see. Though tomorrow, bulls, the ideal scenario, again, we're not very far away. The ideal scenario would be a reclaim of that now ascending 50 period moving average to keep that ascending. Okay, you want that kind of support level moving up as close to the stock as possible with an uptrending stock. But understand that on the 30-minute, that 50 period is going to be the quickest to adjust out of all the moving averages we're going to look at here. So if we're unable to do so here tomorrow, I would not be shocked to see that 50 period start curling back to the downside, which, if I'm a bull, I wouldn't necessarily want to see here, at least in the very short term. Bears, really simple for you guys. A crack downside back below the 200 period would get you kind of back both of those moving averages. A high volume break downside, since we've yet to hold beneath there. Ideally, a lower volume retest, and then a big high volume rejection. Okay, that would, probably get the 50 period curling downside, which you would want, and that 200 period curling downside at a slightly more aggressive pace, even though it is a little slower to adjust than the 50. And by the way, the only reason I'm looking at that at all in terms of These moving averages adjusting and trending with the stock moving in your particular bias. It's just psychology, right? I'm looking for a ceiling if I'm a bear that's moving down with the stock, kind of holding it lower as a psychological barrier, and kind of a floor if I'm a bull. Same deal, moving higher, psychological barrier. Now, onto the 4-hour chart here. Let's take a look. You can see that 50 period is very much so in play right now. You know, if you caught last night's video, we were talking a lot about this here. We did reclaim it in pre-market, gave it up quick, and spent basically no time above that 50 period here on the 4-hour chart during the intraday session. We currently find ourselves about 1% away from a retest of that, so that's well within the ATR for Tesla. Bears, let's start with you guys here. Any volume on the retest, I wouldn't mind. I don't care what the volume is on the retest as long as we get a high volume rejection back downside. Bulls, you want big volume because you're at a slight disadvantage because you're not on your favored side quite yet. Bulls, high volume breakthrough, low volume on the retest, right? And then a big definitive high volume bounce away. That's a big sample size of the market coming in and saying, yep, we're all looking at the same thing and we agree. Now, if there's any chart that you skip, don't let it be the daily. The daily is by far the most important here, and let's take a look. Now you can see here, the moving averages completely irrelevant right now. All right, so what are we left with now? What's the obvious story? Well, the obvious story is the round numbers. We do have important technical and now turning psychological channels. You know, that 166.50 to 167 range is about 2.5% to the downside from where we currently are, at least as of the close. And that 177.50 to 180 channel starts approximately 3.7, 3.8% to the upside. So these are within reason for a single day move. 170, the round number, I'm also paying attention to as an area I would like to hold as a bull. Though I think the true region to watch downside bulls, that goes for YouTube bears, is that 166.50 to 167 region. Bulls, just holding 170 would be a great way to avoid that region entirely. Whereas bears, a crack downside below the lower end of that region, 166.50, that would kind of get you guys through the muck and into what a bull might call like open sky, except, to the downside. Bulls looking to A, hold 170, okay? B, well, I suppose I should probably use 1, 2, so it's not like multiple choice, right? Number 1, hold 170. Okay, priority number 2, head up toward that lower region of that band, that region of expected resistance, really, since we are below it, 177.50. But the ideal scenario, it might take a bit of a day here. The ideal scenario would be to get up through 180 and hold. Granted, that is a 5.5% green day, though we've seen crazier things out of Tesla, but just understand bulls, that would be like a best case one-day scenario. But just getting up toward that 177.50 region to set us up for a real test, I'm happy with that. As long as well we hold 170 to begin with. If not, a hold of 167 is kind of the next area that I'm watching. Now, my favorite part of the video here, what was the bias out of the options traders as they position themselves today, heading into tomorrow, Wednesday? We had a good sample size, about 1.3 million contracts traded today. 693,000 of those were calls. About 605,000 of those were puts. So it's certainly not overwhelming here today, but we are seeing a small call side bias on the overall ratio. However, what I'm most interested in, being that this video is geared toward Wednesday, is that short-term speculator delta range, that 0 to 20 delta range. We had 263,000 calls in that range and about 208,000 puts. So again, a slight call side bias in the short term as well as the overall call put ratio. Listen, if you got value out of that video, please subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.